Good day, everyone. Well, one of the Fed heads said, that's James Bullard, said the fiscal proposals discussed by Trump, they're not likely to take hold until 2018 or even 2019, but we know that. So even without the gridlock, the markets could experience difficulties, much as they did after Reagan took office in 1981. But on the other hand, you've got the Trump economic policies, which are pro-market policies by and large, and so that could, according to the World Bank, that could boost the GDP growth close to 3% by 2018. But nevertheless, you've got concerns over the last couple of days about this Trump dump, that it was beginning because many favorite industry groups have risen very sharply since the elections and have recently been trading sideways, and then you saw that steels got hit hard, as did some bank stocks. But that's not unusual given the rate of ascent that these groups have had. They need time to digest their price appreciation, and on top of that, you've got this relevant point that Trump's policies may be pro-market, but they're not going to take effect for quite a while. So I think some reality, may be coming back into the markets in terms of those select groups. But nevertheless, this always remains a stocks market. It always has. It always will. That's how you make your money, stocks and ETFs. So the news itself is just news. News is not going to make you money. I'm fond of saying, I didn't listen to news one day the several years I was at O'Neill. I generated my track record based purely on what I call a clean room environment. That is no outside news of any kind. I'm pretty sure it probably would have damaged some of my trading because some of the news could be pretty dire, especially the way the headline news and the broadcasting and CNBC and whatnot. They could take these news events and really put a lot of emotion and emphasis into them, and we're all emotional creatures, so I think that it could affect one's trading. Today, I really try to minimize the news. I don't have any television or monitor prompt with CNBC or anything of that nature. I got music playing in the background, and I find that environment continues to work for me. I wanted to mention a few stocks that we put on the list that are of note. Let's start with AGX, that's Argan. This is a stock that had a pocket pivot, but it's been pretty much going sideways. It's one of these stocks that had nice launch, good earnings report recently, and it looks like a lot of these building, heavy construction, this type of industry group, it can go sideways for a while, so it can be frustrating in terms of, if you bought it, have you sold it already? There's nothing wrong with keeping your stops real tight, as we've always said.
Hey, Dr. K, I'd point something out here. First of all, we put it on way back here in early November, so it's had a big run. But what you're noticing now is it's building a base, but notice how it's set two lows. Can you see these right here? You got low here. Oh man, not this pink color again. Let me get rid of that. I don't understand why that's a default color. If there's a way I could make that not the default color. Anyways, you got this low and you got this low, and you've undercut them. You notice that? So you've got an undercut and rally in the base, trying to hold the 20-day line. So this might be viable on the basis of using these lows here as a selling guide, maybe even down to the 50-day line if you're oriented more towards giving things wider stops. But this thing's setting up. It looks okay. I'm not sure about the steels, though. What do you think about the steels?
Well, we know that China came out and said they're going to limit their production, and all the steels rallied quite significantly, putting in pocket pivots. But extended ones, like if you look at X, you wouldn't be buying it at the top there. No. These types of groups tend to trade in a sloppy way, as I've always said. Like gold and silver, commodity type names often don't obey their moving averages very well at all. So you kind of have to buy these on weakness, knowing your exit point. And after the good Chinese news, then we had the the Trump dump scare, and certainly X has taken a bit of a beating the last several days.
If you look at
It's
this,
near.
though, Dr. K, what you're doing, if you look at the weekly chart, what you're actually doing right now is you're hitting the 10-week line. You can see that. So I guess it's at a point of it's got to find support here, but the volume's picking up. But notice also you're undercutting this other low, and they got earnings when? Next week?
I believe it's coming out quite
So I'm
soon.
wondering, maybe it may just hang out here and then it'll come out on earnings. It'll gap out on earnings or something like that.
Yeah, the last couple of times it gapped higher after reporting earnings, and I suppose um, the meat of it is going to be in also the text that this company releases.
Yeah.
Is probably going to be on the bullish side, just given the nature of the Trump policies going forward. So and I also wanted to mention, you'll notice that the 10-day, on the weekly, the 10-day is the price often, it generally hits the 10-day first before it hits the 50-day, but the 10-day.
You mean the 10-week?
The 10-week can serve as the point of support, which is why you sometimes see these names, they don't hit their 50-day moving average. They come very close and then they bounce. So just keep that in mind. So yeah, right now, you can keep your stops very tight on this one. I would probably use an undercut of the 50-day. That could be your stop point. But it looks like an undercut and rally could be in stock for this one. It's good to look at other names as well, like STLD, just to see for comparison. An STLD, same thing. It's right up against its 10-week. So it's behaving similarly to U.S. Steel. AKS is another one. That one is a bit of a wilder mover. Relative strength's 99, so when it goes, it really goes. Again, this one is coming up against its 10-week. So yeah, they're all acting similarly. Again, you look for an undercut and rally in a name like AKS. What else we got here? NVIDIA was, of course, our stock of the year last year. It had that high volume reversal, which we pointed out. That's your exit day. Exit at the close, basically. That's a telltale sign of near-term exhaustion at the very least. And it went all the way back down to about 100, and now it looks like it's trying to find some sort of floor. The trading, the volume has been very light the last 3 days. Right now, the rate is minus 25%. So it doesn't look like that was a major top in late December. These stocks, when they do get ahead of themselves, as we always say, take your profits. And the nice thing about NVIDIA, what I really liked about it was we added it. We mentioned it a couple times, more than a couple times, in terms of pocket pivots, viable gap-ups, and continuation pocket pivots. And the price just was a very steady mover. It rarely got out of sync with its patterns. So you could actually sit and hold this thing for a number of weeks and activate the 7-week rule, which says that you'll only sell it if it violates the 50-day, because it violated the 50-day within 7 weeks. Violated the 10-day within 7 weeks. So then you switch to the 50-day as your long-term selling guide. And with top quality stocks, that rule tends to work very, very nicely, as it did with this one. So be on the watch for possible future pocket pivots or undercutting. Maybe this could undercut the 100 level as it nears the 50-day here, and that could give you an entry point, a very low risk one. We've also got this one of my favorites because the time value on it is enormous, and that's Amyov, Myovant Sciences. It's twice we've mentioned this one. The day before, it had a rocket day. The first time was a nice 20%, near 20% gain, and the second time was a near 15% gain. So I'm watching this one like a hawk. I'm waiting for this one to possibly do something like that again. It's as you can see, the volume is drying up very nicely. Love the the volume dry-up action, what we call voodoo, and perhaps at some point, keep your alerts on this one because it could make a move.
You know, it looks to me like you're trading minus 59.9% on the volume. You got to buy this thing when it's quiet. It looks to me like it's getting quiet right above the 20-day line. The only thing I don't like here, Dr. K, is it trades 147,000 shares a day, which makes it micro thin. I mean, if you're looking at thin names, maybe the QTNA pulling in is a little better. I actually have bought a little bit of this off the 20-day line here, but even this one's thicker than that thing, I think. But that's the one.
Yeah, I was going to say
So,
QTNA. When I traded this one, it's like trading on air. I mean, the price can slip very quickly, even for a small number of shares. So you got to be very careful with these ones. Put in limits where you can. It was a good trade, but nevertheless, it could have been a better trade had the slippage been more contained. And I think Myovant is, it's certainly it's a very thin name, so you have to be very cautious with this one. But what's nice is, if your account size is, say, 100,000 or less, then you can play these very easily. You still have to be mindful because, buying a few thousand shares can certainly move the price if you're trying to trade it at that point in the trading day where there's, very few shares being offered. So just be mindful of that. Yeah, we used to call the what was it, the 50 to 100K zone the fun zone because you could you could trade your account like crazy and drive it up pretty quickly. As opposed to having seven-figure or higher counts where you got a lot of these names you couldn't even trade anymore because you just can't get meaningful size. Next name I wanted to mention was, let's see, well, I mentioned QTNA already, and that one is pulling back as expected. We mentioned, I believe we mentioned that, when on this one, this is a classic case of, it gets ahead of itself on the very first day, the very first launch on the 5th, where it's up 16.5%. And there's nothing wrong with taking profits, right there near the close, or if you want to wait till the next day, I would keep your stops exceptionally tight on these ones because it's not the 90s. These things just generally don't keep going.
I think in last week's webinar, we actually said that we would be selling this up here because you got more than a 20% gain, like a 25% gain in just 3 days. And we put it on this day here when it was trading below 20. So, I mean, that's a 20% gain in like 2 days from there. That's nuts. So, yeah, you got to take that, right?
We mentioned that in the webinar. I was just thinking, I believe we mentioned it in one of the reports, since for those who, yeah, okay. Yeah, because that's just, it's a layup trade, what I definitely call layup trade. And, same with MYOV, you just, if you want to hold on to MYOV, to the next day, just thinking you might get a little more juice out of the move, like 20% is not enough in a day. I understand because that's kind of the way I am, but I keep stops extremely tight in those situations. That part hasn't really changed since the 90s. In the 90s, sometimes you got a stock that would move 3 days huge. And by huge, I mean at least 50% over 3 days. And by the 4th day, I would always hold it just to see if I could get that 4th day. But I remember almost every time that 4th day, it would either open a little lower or once it traded below the prior day's closing price, I'd be out of the position. It was very, very fast to cut my losses in that kind of setup. And as you can see with MYOV, you're wise to do the same because it takes no prisoners once it's heading back down. I mean, the day after it had the 20% gain, it gave back half of it. It was down about 10%. Let's see, the big tech juggernauts. Wanted to mention Amazon and Facebook and Netflix. They're all on our list, and they've been doing well. That's a sign of health in among techs after having some trouble. You can see that the NASDAQ 100 and the NASDAQ Composite have been leading. They haven't been going sideways. They've been in a nice uptrend. So it's a reflection of these big cap tech names that are leading the way. Meanwhile, the S&P 500 and the Dow, these are going sideways now for over a month. So the elusive 20,000 level remains elusive for the time being. But it'll be an interesting breakout when it does happen. It looks like the platform's ready for possibly a genuine breakout that does not reverse like the reversal we saw in March of 1999 when the Dow crossed 10,000. And last couple of names I'll mention here is GKOS, that's Glaukos Corporation. And this one, well, that one and Box, these have been on really nice uptrends since we put them on. And you know, the question is, well, where do you start taking profits? The 10-day is pretty far from both names, and you're sitting on, what are you sitting on? About a 15% profit in these names, something like that. Maybe more, maybe 20%. So you want to keep your stops very tight on both of these names at this juncture, because it's still kind of it's a kind of market that has a natural ebb and flow. When you have your profits, you should take them, and you know, and be very quick to cut your losses. That character has not changed yet. I mean, it could, but so far it looks like there's just that natural ebb and flow to the market where you can push profits into your account on a monthly basis if you trade in this fashion. You know, and maybe some months you're not going to trade a thing because the setup isn't perfect in any one name, but you will get your months where you do get really nice setups. And you know, certainly a stock like Emyov or QTNA, you know, they make all the difference if you bag enough of those inside of a year. They make all the difference to a trading account. And keep in mind, you know, that last couple of years have been excessively difficult. You know, by many media accounts, the most challenging years in terms of trading the markets. So, you know, if you finish the year and you're up double digits, that's an achievement. That's something to be said. Naturally, you want to shoot for, you know, more than 10%. And as you get better, you can end up being up, you know, more of a moderate level of double digits. You know, stronger double digits. And maybe if we get a window of opportunity opening here of some sort, where things start to really run. And we haven't seen that action in a long time, but if we do get that, then of course you know, shoot for the triple-digit territory, because an honest window is open, and we haven't had one of those proper windows really since late 2006. So we're going over 10 years now. You know, not 2009. Yeah, the market was fierce and in a very fierce uptrend, but it wasn't an open window. It was, if anyone traded that market here, and I'm sure many of us did, it was a difficult market to trade in terms of beating the market averages. And certainly the trend following wizards, the collective group of traders that have been interviewed in books and, you know, have been trading for a long time with exemplary track records, collectively they couldn't beat the market at all. In fact, they did quite poorly in 2009, and then continued to do poorly over the ensuing years. I believe last year, I think collectively they were down once again. And if not down, they were all pretty much flat. So anyway, just keep in mind that, you know, don't get too frustrated. You know, keep the basic tenets being, you know, be quick to take profits when you've got them. So this applies to both of these names. Now I haven't gone through every name in the list, but Gil and I can touch on additional names as needed.
I'll look at some of these real quick. I'm going to use my HTS Investor software here. So here's Square pulling back into the 10-day line. Notice how it's trying to hold the top of this structure in here. But your buy point, we talked about this last week, I think. When you undercut this 1365 low here, you undercut it here. That was an undercut and rally move you could have played. And then you get a pocket pivot here, which we put a report out on, and then you head up to highs here. And if you look at this on a longer-term chart, what you're going to see is, let's see, let me get my weekly chart up here. Here we go. You can see that the stock is all the way back up to the post-IPO highs. So what you've got going on here is probably going to need to take a break for a little while and wait till earnings are announced on March 8th, which is a while away, but it might just hang here. It would seem to me, though, it needs time to build a base here, and then maybe it comes out of there later on. So I'm noticing right now the Dow is down 21, S&P's up 3, Nasdaq's up 27. But while you're seeing this, though, advanced decline line on the New York is 1783 to 1034. On the Nasdaq, it's 2008 to 787. So you've got a lot more positive action. I think it's just a matter of being in the right stocks at the right time and using weakness to buy some of these names rather than piling in on strength. So in fact, I moved to cash a couple of days ago when some of my names got extended on the upside, and I had 10, 15, 20% profits in several of them. So, you know, and like the QTNA, like we're talking about that one, that's there it is on the weekly chart. So it's just coming back to the top of the base. Maybe it's viable here, maybe not, but I think you're better off trying to pick it off here than chasing it on the upside and getting all excited over a base breakup. But here it's coming in. It looks a little scary. I don't know if that means that it's viable. So, and right now you're running 217.2% above average on the volume, which I suppose if it could hold here and come off, I guess you'd post a pocket pivot off the 20-day line based on the projected volume right now. So I don't know. We'll see how this one plays out. But I wouldn't get too freaked out about watching the Dow. I think there is this movement out of stocks that were initially seen to benefit from the Trump administration policies, and you know, like I think we've been talking about this, Dr. K, that a lot of that's ephemeral. You get the initial emotional reaction to it, but then you know, reality sets in, and people start to wonder, okay, well, what's really going to happen? What policies is he really going to be able to put in place? And I think you will get a tax cut. What they're going to do with Obamacare, we'll see. They're in process of taking it out and replacing it with something, but they could screw it up. But I think if you get a tax cut, that alone is probably strong for the economy. And I would be looking for the names that really have organic growth and aren't so dependent necessarily on specific Trump policies like building a wall or increasing military, because there's been a lot of mixed messages there. And I think last week we saw some pushback from Congress, even Republicans in Congress, that they're not really ready to spend a bunch of money and go further into debt to engage in a lot of these projects. So they're going to have to think it through. So I think those names lose their momentum. In the meantime, we've seen other things move to the fore, and some of the names that we've liked. Trade Desk, we talked about this over the weekend. You want to buy it off the 50-day line. That's probably where you want to get it. It doesn't look so hot at the time, but you'll notice it hasn't suffered from any volume selling. So if we blow this up a little bit, you can see here along the bottom, the volume selling on the way down. You kind of crescendoed at the bottom, and it dips below the 50-day line. And then turns and heads back to the upside. So you can see this thing's got to be bought on weakness. So if you extend this idea to some other names, that's TTD, that's on our list, like Impinj. This is another one to keep an eye on because it's floating along the 50-day line. Earnings come out on February 2nd, however, so it may not do anything until then. Another one I got my eyeball on is NTNX, Nutanix, which is hanging along. It posted a pocket pivot right here, which would be coming up to the 50. I think that's a pocket pivot, or did it just miss? It's 1204800. No, it just missed it. Okay, I thought it might hit it that day, but that looks constructive, and maybe you'll pick up another pocket pivot in here somewhere else, and it'll head higher. But they've got earnings aren't due until March 7th, so that gives you some room. Okay, now we're seeing the Dow coming off. The Nasdaq's still up 2741, so I wouldn't say that this looks all that grim, at least not right now. So other names to keep an eye on. Let's see. You'll notice Twilio and Acacia might be trying to form bottoms, but they sure as heck haven't done it yet. Maybe they're getting to a point, but you know, these things have just kept getting bombed. I know that Acacia was presenting at the Needham conference earlier in the week, and they got bombed, I think, on Tuesday on heavy volume. You can see that here. Right here, you get the big gray mark. That's kind of an oversold bar there, so, and it's undercutting these lows in here. So I don't know, maybe it tries to come out. In the meantime, I'll keep an eye on something like ANET, which this is very interesting because, yes, I actually was playing this short yesterday, and the day before as it came down through the 100 level. And I'm going to show this on the 620 chart because I think it's pretty fascinating, but it also shows how you can use the 620 chart to stay out of trouble on the short side. And in this market, I think that a lot of times when things start to look too good one way or the other, you need to beware. But you can see here, if we look at the 620, this is a 5-minute chart, again, using a 6-period orange moving average exponential and the blue 20-period exponential moving average. And then the MACD settings are basically the same, 6, 20, and then, I don't know, 9 or something like that. I just put in 6 and 20. In any case, you can see that early in the day, within the first half hour, the stock busted hard. And you get this huge volume break. It takes a stock through the 20-day moving average. So what do you, if you're short the name, you're looking at this MACD stretch down here at the bottom. And let's see. So you get this stretch here down at the bottom, and it's coming down, and you get a big volume spike. What does that tell you? You know, a lot of times in the old days, I would say pre-algos, you would see a break like this as confirmation that something is weak. These days, a lot of times that's just exhaustion. And what happens is something will that'll be the low you've hit. They've hit all the stops. They've cleaned it out. All the algos have gone berserk and dump the thing all at once, and they wash out the sellers, and then it starts to turn to the upside. So if you're short this thing, you got a nice gain pretty quickly in the morning, and you guys who've been around for a while know that I talk about how usually the fattest part of the day on the short side is the first couple hours, and then things will simmer down, and that was the case yesterday where we saw the stock settle down and hangs on, and then you get a cross here on the MACD, and now you set up, and then you get a buy signal here with the MACD already in buy signal territory. So if you're shorting it, you know at least you're not going to hang out beyond here, okay? And now the stock's up here trading at what, 188. So now you're back to the Livermore century mark rule, using 100 as your tight stop. So this looks okay to me. And I like to shake out the supporting action. Go ahead. This is on our list too.
I was going to say, on that intraday chart, what I've noticed is when a stock has a big volume down bar, like that one did,
like that one,
but only after it's been falling, not in initial. If it's initial, that's great. But if it's been falling for a while and it has that signature, then that is either my cover point or my sell point if it's in terms of a long position, because then you can see here that it finds its footing. And then it starts to move higher. So yeah, that's a clue that seems to have good success in terms of managing your position intraday.
Yeah, and it helps, and you want to be taking profits actively. You know, if you start to get a break, then off the peak, and we get into a real correction, you usually have chances to short into bounces on the way down initially. But if you're in a position where the index is, you know, the Nasdaq's making new highs. And the other thing to point out is notice how the NASDAQ bumped off the 10-day moving average yesterday intraday, and that's right on top of this prior consolidation here. So if I see that, and at the same time I see something like this, guess what? It's telling me that I need to, I'm at a point, a possible inflection point, and I want to be taking my profits. Because another thing, I was short this one yesterday, and he had a similar sort of movement early in the day. It broke down. It set a low here. It bounced up into the 20-period line, and then it broke down and undercut that prior low. But at the same time, you'll notice that you get the MACD cross here. So you're a little bit stretchy sort of in here, but not really. But once you undercut that low and you turn and you get the cross, now if you're short this thing, you know what? This is today. Yesterday's better. Hold on. Here we go. Yeah, so see, it did the same thing. It's like 2 days in a row it's acted the same way. So basically, here was your break at the open. Okay, you set the low here, you bounce, you undercut. But what you get here is you get the MACD cross after it gets stretchy to the downside. Then you turn and you get the cross here. So if you're shorting this thing, you got to be covering in here. And then what I'll do is if I'm feeling, and I get this visceral feel from things, if I'm feeling a name showing a strong bid at a certain point, then I will turn and flip out of my short and go long. And that was one example of a stock I flipped out and went long. I'll show you another one. And this one's actually worked out pretty well. I'm still long it, is Grubhub. You know, I was looking at this yesterday. So here you go again. You get the sharp break at the opening, I think it is. And yeah, here's 630 here. Boom, boom. You break down, and you immediately are coming in, and you get the MACD stretch, and then you get the turn. And then you get a buy signal at like 36, well, it's closer to 37. But at that point, if you're short the name at the open, you got to be out of there. And when I see the MACD stretch and cross, and at the same time I'm seeing the NASDAQ bounce off the 20-day, and I think the Russell did the same exact thing. No, it didn't. What did it do? It undercut the prior lows. It was the Dow. Had undercut prior lows here, and then it turned and rallied. But when I start to see this sort of action in correlating action in the indexes, and it's jibing with what I'm seeing in terms of downside stretchiness on the 620, I'll just flip cover and go long. And that has worked pretty well. I mean, a couple of weeks ago, wasn't I talking about Mobilize as short, and then when we put out the link to the video, I noted in a paragraph that I had actually flipped and gone long the stock. It was on this day back in late December, and this thing's continuing to go higher, and it's hanging along the 20-day line. I think this stock could morph into a turnaround situation here, and I'd watch this. You got a couple of nice bars off the lows here, and now you're hanging along the 40-week line, the 200-day line. So I thought this was viable right here, right along the 200-day line yesterday. Anyways, I'm going to answer a couple of questions. Let's see. Somebody's asking about IPHI, Infi. That one looks okay. It's been an erratic stock, though. Look at the weekly chart. So I wouldn't be buying it on strength. It might be something to look at on weakness. But it's been trying to act okay. But it is a little squirrely. So not really one of my favorite names. Rowan Drilling I like because it had a pocket pivot the other day, and that may be one to look at. I think they come out with earnings soon. Most of the oils are going to come out with earnings pretty soon. So I'd be a little wary there. You see that the Dow's down 12. They got it down like 27. They're going to scare everybody. But I'd watch breadth, and I basically would stick to watching your stocks. So, but that looks good. How do you know when to sell strength in a name like Box? I kind of use a time value calculation. How much, how fast? You know, I would say you could be selling it anywhere in here. As it's starting to break out, though. So one thing you could do if you got in early, this is the advantage of using the Bible gap ups, the roundabout type Bible gap up, which in this case it breaks out through the midpoint. So now you could use the top of this base as your trailing stop if you wanted to. You're only $1.31 away from that. So you know that might be something to sell into, then look to buy back, or you could sit with it using the 16 area as your trailing stop. So
yeah, there's the way I generally I'll look at the whole chart, you know, at least 1 year's worth of data, typically a year and a half to 2 years. But I want to see how the stock has been trading more critically within that last 12 months, because every stock will have a certain rhythm to it. So if you look at Box, for instance, you look at that rate of ascent it had, and also make sure you're using a logarithmic chart so that you know, it's not distorted on the linear. So you can see the true slopes of price improvement. So if you look at, and of course, you know, the charts we're using are always, I believe they're, do you have yours set to
what? These are
linear
logarithmic. My weeklies are logarithmic.
Okay.
Well, that's a double bottom breakout.
And so you'll see the rate of ascent on Box between July and September at a certain character. And the rate of ascent right now is faster than that. So that tells me, and also how many days are we up in a row, that tells me that the price is getting ahead of itself right now. So if I had a position in this, I would probably be looking to sell on the first bout of weakness, keeping the stops real tight, like I showed you on the other examples, like Emyov. So I'd still be holding it, because I mean, this thing, you know, you never know. You might get another couple days of price improvement. But I would probably keep the stop extremely tight, as in, you know, undercutting today's low at 16.87, something like that. That way I keep most of my profits. And then a lot of these stocks get ahead of themselves. They'll absorb their gains, they'll digest their gains, and then they'll offer possibly another entry point in the way of low volume action, quiet volume drive action, or maybe an undercutting. Something will give a clue, or it also could be one of those pocket pivots that undercut and then finish strong. And those are some of my favorite ones because those types of pocket pivots are often not extended and can be bought during the trading day or toward the close.
Somebody's asking whether you've studied pocket pivots on weekly charts, but I think we've answered that one so many times it's kind of ridiculous. It's sort of, to me, that sort of question indicates that you don't really understand what a pocket pivot is trying to pick up in the first place, which is the subtle signs of accumulation by institutions on a daily basis. And I don't know if pocket pivots on weekly charts are necessarily something that's going to tell you anything that you wouldn't see on the daily chart already. What's your take, Dr. King?
Yeah, it's like we've always, it's you're too late using weeklies. It's the price, your risk level in using weeklies is beyond what it should be. Whereas with dailies, you can fine tune it so where your entry point, maybe you have a 3 or 4% risk on your entry point, but you can't do that with weekly charts because the resolution is not fine enough. And of course the market is fractal, so in a way I suppose they would work in the general sense on weekly charts, but again, risk is the most important variable when it comes to investing, and I think your risk levels are too excessive by using weekly pocket pivots.
Let's see, what else are we looking at? Some other questions here. Someone's asking, what kind of action in Twilio would suggest a good risk reward in a tradable bottom? Well, some sort of bottom fishing pocket pivot would be nice, or some sort of move back above the lows of some authority. But you can see this thing's tried to do this before, and it just hasn't been able to get going. So my view is, if it's not working, leave it alone. There's plenty of other things to go after. So that's generally how I look at it.
Yeah. You had one. I think we talked about it, or at least, it was on the 20th, December 20th in Twilio. It had a pocket pivot, mid-bar close, and then if you looked at, I was looking at the intraday, to base my entry point the next day, and it was a very clear entry point on the intraday, and the volumes started to really rush in, and the price, was up 15.6%. The very next day, so that was your chance in this one. It may give another chance because it was a leading stock at one time. We'll see how it does going forward, but I think everyone sees that action and they're hoping that it'll repeat. And it is getting quiet. The price volume's getting nice and quiet in here. It's getting tighter. So this is on my watch list as well. 'Cause you never know. Sometimes these things will repeat their attempts. And Twilio, as far as the fundamentals, it's got a good story. There's a reason why it went, was one of the leaders last year. And the question, I guess, is, how's the competitive landscape? Can it maintain its advantage? That's the big if. And the price volume will tell you all you need to know there.
Yeah, some other things to keep an eye on here. Some of you might have seen this. AAOI yesterday had a big Bible gap up. You might want to watch it coming in here. Might have a lower risk entry point in here. But this group, you have Finisar, you have Sienna, you have Light, you have FN. And I'm watching some of these trade, and you can see this one's undercut a prior low here. Light just undercut a prior low in the pattern here. It undercut this low here, so it's trying to rally. Finisar had like a bottom fishing type pocket pivot yesterday, and it's trying to rally. So I'm watching some of these to see if they come back. Sienna's probably one of the stronger ones in the group. That was viable at the 20-day moving average. So I'd be watching for additional turnaround type action in here. Another area I've noticed is Solar's coming back, and I'm long Fizzler, First Solar, way down here. But a lot of these things have been heavily shorted. Watching the other names, they're not as spunky as First Solar, but I think they have the best forward estimates solars, and everybody's short them, and it has been short. So it could be ripe for a move based on short covering. So somebody says, I can tell you as a physician, oh hey Brad, nice to see you back. I can tell you as a physician it's going to be very hard to repeal Obamacare, perhaps part of the ACA, but what is the essence of Obamacare? It's very hard to take away once something has been given. That might be true. So, you know, that's another thing that may not come to pass, but I guess you don't have to worry about that right now. Some other names. Notice whoa, wrong. INCY, you guys probably hopefully saw that. You had a Bible gap up here. It actually had a pocket pivot trendline breakout here. So we were talking about this from before, and it was tightening up a little bit. Well, not really sure about it. The base was iffy. But then once you get this pocket pivot, it's telling you it wants to move. And this is one of the better ones fundamentally. So you get a gap up, you test the low here, that becomes viable there, it looks like to me. My favorite, though, has been this Clovis, which is a little funky. You get a breakout, then you pull right back to the breakout point here in early January to start the year out. You could buy it there. That's a low-risk entry point, and then boom, it shoots out of here. You get a pocket pivot the next day at the 10-day line, and it's continuing higher. So that one I like, or have liked. It's a little extended now. But you're seeing some of the biotechs coming back to life, but not. It's still a little uneven. If you look at Celgene, Biogen, you know, that's looking kind of iffy. Gilead, Amgen, But I think some of these other ones like the GKOS, the Glaukos, we got that one on. That's a good one. One of the best movers. That's one area to be looking at. So let's see. What else? Oh, I keep an eye on Lululemon here. Looks like it might be trying to set up. It's in this sort of funky pattern, but it looks like it might be trying to set up along the 10-day line. So what else? You might keep an eye on some of the oils. Parsley Energy trying to hold up. They completed a $22 million or 22 million share secondary, and so that's looking like it might try to go higher. All of these stocks have been sitting along their moving averages. You'll notice FANG had a very subtle pocket pivot 3 days ago, but it's not really going anywhere. It's holding above the 50-day line. We looked at Rowan Companies. Actually did have a pocket pivot. It's drifting into the 10-day line. Some of these names might go higher because I do think that Trump is going to be favorable for the oil industry. So anyways, looking around here. Mobileye I talked about. Weibo, you can see, I mean, this one was setting up here along the 50-day line. I think a lot of these are coming out. Let's see, oh, getting an alert here. No, it's not the Dow hitting 20,000. And this is all, you know, pulled into the 50-day line. I was actually playing with this one down here. I think I talked about it last week. It moved higher, ran into some resistance along these highs underneath this base, and pulls into the 50-day, and you buy it there. So again, if you're going to try and buy something, you're better off trying to do it on weakness rather than chasing strength. So you take a 15-20% gain on this thing in a few days, and then it comes into the 50-day line, you pick it off. Notice also Baba is hanging in there. They come out with earnings on a week or so. You have Bowsen is another one. Look at this thing, a little bottom fishing, undercut and rally type move and coming up. That looks pretty decent. But some of these things are setting up, and I think in this case, you know, in a lot of these cases, you want to be watching these names for opportunistic entry points. You know, I'd even look at, say, Qualcomm is trying to rally. And you know, this may turn around. They got earnings coming up soon, but you know, it looks pretty good. So, but oh, Zillow, keep an eye on Zillow this morning because that's looking like it might flash a pocket pivot. That's been on our list. And I've been watching Yelp. So this kind of goes with Grubhub. Yelp's been acting well, so I kind of watched this one in concert with the Grub, which is actually trying to post a bottom fishing pocket pivot today. Let's see what else. Running through my list. Oh, Everbridge. It's another one. Whoops. Trying to set up. So, you know, that's sitting along the 10-day and 20-day line. So that one is in position. It's a thinner stock, but it looks okay. But yeah, that's what I'm looking at today. That's my and these are all acting okay. I also watched CUDA, Barracuda Networks. I'm wondering if the cybersecurity stocks won't come back. So it tried to break out here. It got up to the highs here and it ran into some selling, which looks normal, but then you back up and you get some support off the lows yesterday, and now you're trying to turn back up through the 24 level. So I like this using the low of today as a stop, or you can use a 10-day if you wanted to. But a lot of these names could be on the mend, and they're starting to come back. You see Cyber, Palo Alto Networks is another area, another one to keep an eye on. Notice how it's starting to come up through the 50-day line, but running into the 200-day line. So that might be one to keep an eye on. But you know, these are the leaders, I think. CUDA is a leader. Cyber probably is another leader. PNW is another leader. And looking okay, actually. So these might be areas to be watching for setups as they kind of work their way up here, and then maybe flash pocket pivots. I think PNW flashed pocket pivot off the lows here 7 days ago, so it's trying to turn. So anyways, so that's what I'm looking at. That's really all I have. I want to get back to my trading, so I think I'm done for now, Dr. K. How about you?
Yeah, no, I'm same thing.
All right.
I've just been monitoring a few things here in real time that are at possible tipping point. So back to the state of the drawing board here.
All right, sounds good. So no more questions. So wait a minute. Let's see. Wait, hold on. Somebody says, on the breakout on ANET yesterday, I was long and it shook me out. I got back in at the end of the day, but I felt I had no defense against that. You didn't. But the fact that you bought back is smart. So somebody's asking to explain a 620 chart. I think I already did. Go and review my discussion. CMG. It's back up to the 200-day line. I don't know. I mean, I guess you could treat this as a bottom fishing Bible gap up and use the low of this day 4 days ago as your stop. iRobot is another one. It might be worth watching. It's hanging tight. I mean, I think I talked about this one last week, and you did get a pocket pivot 4 days ago, so that looks interesting. I guess it's testable, so you could do that. No, Brad, there's no way you can defend against that other than, you know, limiting your risk or giving a wider stop. But then I think the only defense is offense. So in other words, if you get shaken out and you realize that, you turn around and you go long. So any interest in shorting NVIDIA? Not really. Navi. That looks okay. I don't see any, some pocket pivots. I mean, I guess it looks okay. Yeah, that looks okay. I think this stock is going to benefit from something. What was it? I think the telecom thing. So I think I keep an eye on that one. That's a good idea, though. I like that, Scotty. So anyways, that's all I got. So we're going to cut it off here. I want to get back to trading, frankly. So thanks for showing up, you guys. Hopefully you got some ideas from today's webinar. And have a great weekend. We'll catch you next week.
So long, everyone.